Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Wall Street has been running lately, setting a bunch of new records. Luckily for us, one of Australia's most well-known investors is on the ground in New York and is happy to give us his take on what's going on and where he's seeing the opportunities. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Geoff Wilson is the founder, chair, and chief investment officer of Wilson Asset Management, and today he's joining me from New York. Geoff, welcome back to Fear and Greed.
Sean, hey, always to be on one of the great Australian podcasts.
Geoff, you are far too generous. Tell me, what are you doing in New York? You're over there with the Wilson Asset Management team. What are you doing?
Yeah, well, first of all, one of the funds we manage is WAM Global. Katrina, who's the lead PM, she's actually based in New York. She's been over here for a couple of years. Pretty much half the team's over here now. Because when you're investing globally, and even by market cap, there's 50% plus of the global market listed in the US. So the opportunities are here. It works being in the same time zone. In terms of me being here, I hadn't been here since pre-pandemic, so everything's sort of aligned, and it was a good opportunity to be over here.
Right. So tell me, what are some of the key themes? Obviously, we'll get to some of the sectors like tech, etc. But before we do that, kind of a bigger picture view of the small cap scene in the US. Been a rough couple of years broadly for small caps. What's the prognosis for 2024 as you're reading it there?
Yeah, I think both here in the US and in Australia, we're both pretty bullish about those smaller, undervalued growth companies, and the money has been flowing to the larger end of the market, and it really has left the mid and small indexes significantly behind. The interesting thing is, over the last few months, that seems to be changing a little bit, and I think it's interesting. Over here you've got the Magnificent Seven, the tech companies that have really driven the market significantly higher over the last 12 months, plus. But it really seems to be broadening out now over here, which is a very positive sign for the market over here in the US.
Okay, Geoff, so what's your broad take on the market going forward?
Well, if you look at where we are, we're in an election year. And I think for the last 100 years, I think in 3/4 of the election years, the market has gone up. And I think it's increased a little over 7%. Also, a couple of other things. One is when you're in a period where interest rates are being cut, the market tends to go up in those. Also, you mentioned earlier how the US market's hitting record highs. And what you tend to find is when a market's hitting a record high, it tends to do that for a longer period of time. It just doesn't hit a record high and then it falls significantly. I mean, the statistics go something like, if an index has been hitting a record high for 12 months, it's something like 83% of the time in the next 12 months, it's going to be at least 12% plus higher. So I think everything's set up, for this year, being 2024, calendar 2024, to be a pretty reasonable market, even though we've seen some strong performance in the early part.
Stay with me, Geoff. We'll be back in a minute. I'm speaking to Geoff Wilson, Chair and Chief Investment Officer of Wilson Asset Management. What about by sector? What areas of the market look attractive to you?
Well, I actually think, again, you want to look at the unloved areas. I mean, one area that has been unloved is more the medium and smaller size companies. They are the cheapest they've been relative to the large companies, I think, for the last couple of decades. So all the money's been going to over here, maybe it's the Magnificent Seven. What'll happen is that the rally will broaden out, and then those more medium, smaller size companies will start performing. Also, I tend to like to invest areas that aren't the flavour of the month. And it's really looking for areas that or sectors that have found things have been difficult or their valuations are sort of depressed.
Can we drill down on that? And what are you seeing? Where are some of the opportunities in terms of sectors? Are we kind of talking about retail, which have obviously been hit by cost of living? Are we talking, where's property fit in? Where's mining? That type of thing.
Yeah, well, first of all, first time I've been back in New York since pre-COVID, and unfortunately, it is a changed city. I lived here in the latter part of the 80s. I was here for the 87 crash.
Were you a star rugby player, Jeff, over there?
Well, no, that's another story. That's another story, yeah.
Right.
Nearly had a game. We probably don't have enough time on the podcast. But
perhaps not.
But sort of going back on retail, one of the difficult things is over here, anyone who hasn't been to New York for a while, some of those fantastic department stores just don't exist anymore, like Barney's, etc. And retail is difficult over here. It's interesting, you're seeing a lot more of the individual shops. Obviously everyone went online. Like New York is still suffering. Everyone hasn't fully come back in terms of the work from home, et cetera, et cetera. But in terms of looking at sectors, retail is a sector that's been unloved, and to me, there's definitely some value there.
Beyond the US, what are there other regions that you think look good? You made the point up front that in your world, small and mids, it's about 50% of the market. What about outside that? And I suppose I'm thinking of Europe, because that really has been sold off, and European markets have not had the time of it that Wall Street has, for example.
There are some good individual companies in Europe. I actually think the UK, unfortunately, has some significant structural problems, which unfortunately they put in place in early 2000. And, Sean, you probably think, oh, look, at least we're having a good podcast, and Jeff hasn't talked about franking and franking credit.
Oh, we almost made it.
Yeah, true. But unfortunately, in the UK, they had a similar system to that called the Advanced Corporation Tax, and they had it in for 26 years. And they got rid of it just before 2000. And you know how when you have those type of systems, like we have the franking system, it encourages the local investor to invest in your own companies. And that's what we see in Australia. And they had that in the UK. And I think back around 2000, UK pension funds own something like 40% on average of all listed companies in the UK. And they took that system away, unfortunately. When the incentive to invest in the UK companies went, then they went offshore. And now I think UK pension funds, their exposure to UK stocks is something like 4%.
Oh, wow.
So there's been a big outflow of capital. Now the good thing is, that outflow is finished.
Yeah.
And the UK government's looking at legislating to force UK super and pension funds to invest in UK companies. I'll be over there in a couple of months' time, so I'll be able to do a podcast from there and give you the
excellent,
the full rundown. But so to me there is some value there. But we still think why we're more inclined on the US is this is a presidential election year, and a lot of money is being pumped into the system, whether it's through infrastructure. Obviously the incumbent wants to be re-elected. Biden wants to be re-elected, so everything he can do in terms of putting the US economy on the strongest footing possible. And then you tend to find next year, like to me, I think we're pretty good for this 12 months. But then next year, things will be a bit more challenging. So no matter who wins, the first year of a presidential election in the US tends to be a more challenging one for equity markets.
One final question, Jeff, and it kind of comes down to the franking question. If I'm sitting here in Australia and I'm investing in one of your funds, I get the benefit of franking credits if I'm investing in the local equities, like the small mid-cap equities fund. How does it work if I'm going into Wilson Asset Management Global? I'm not getting the benefit of the franking credits. So presumably the returns in that I want, the capital returns, to be higher than what I'd expect locally. Or is that a bit of an ignorant question? I'm not sure.
That's a fair comment. But in the end, I suppose it depends who you are as an investor. Because if you happen to be, more my age, maybe not your age, Sean, and you're in the pension phase with your super fund, then you get the benefit of using the franking credits. If you're younger, then you actually want the capital growth. And obviously we know, how do you get the franking credits when company pays fully franked dividends? You get the franking credits, but also when the company pays tax. Now, WAM Global is domiciled in Australia. So even though we invest globally, any profit we make, we pay tax in Australia. So WAM Global, yeah. So, but you don't get the free benefit of getting fully franked dividends as well.
Yep. Okay, Jeff, I hope you're enjoying, or I enjoy the rest of yours. So, how long are you in New York for?
Yeah, for another couple of weeks. Yeah, seen some fascinating people over here. Bill Ackman, one of the probably the smartest hedge fund players, and talking about the listed investment company space. He has a big listed investment company or closed-end fund. And he's going to do another significantly bigger one. He's a big bull of the space, which I was very positive, and saw an activist, Boaz Weinstein, who's from Saba, who's putting a lot of pressure on closed-end funds globally and in the US and in Australia. So we can cover off on those at another point in time.
We will, Jeff. Thank you for talking to Fear and Greed.
Thanks, Sean.
That was Jeff Wilson, Chairman and Chief Investment Officer of Wilson Asset Management. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.